Yo, yo, yo. Hey guys, welcome back to another awesome edition of the Best Practices Show podcast. It's the beginning of the week. It's Monday. Happy Monday, everybody. Hope your week is a great one. And on Mondays, we do what's called Metric Mondays. Little bite-sized piece of information on some metrics that can change your practice and change your life. And today we're going to be talking about one that's greatly misunderstood. Gross profit percentage, and why it's the health indicator of your dental practice. I hope you listen to this, and I hope you use it because it'll change the game for you. So please listen up. Hope you guys enjoy it, and we'll see you soon. Hey guys, welcome back to the Best Practices Show podcast. Thanks for tuning in. You know what it is? It's Monday. You know what we do on Mondays? We do what's called Metric Monday. The goal of Mondays, whether you're driving to work, whatever you're doing today, we're just going to give you a bite-sized piece of information. It's usually a metric around how you can improve things, and we're also going to give you some countermeasures so you can use it. It's a bite-sized piece of information. And today, we're going to continue this series on Metric Money. So, Barrett, where are we going today, brother?
Well, last week, we talked about overhead, everyone's favorite topic. And we also talked about that we're telling a story of the financial gaps. And so if you're new to this Metric Monday programming and you like what you hear, go back and listen to the last handful and you'll get caught up pretty quick with the story. Today, we're talking about gross profit percentage. And gross profit percentage, we'll define that in a minute, but it's really another health indicator of your practice. It indicates whether financially you are healthy or maybe unhealthy. So let me quick define it, and then I'll have you layer on, Kirk. So gross profit percentage is the revenue remaining after all of your overhead expenses are paid. Your lab fees, your supplies, all the direct costs are paid, all the P&L. What percentage of that revenue is left over? It's kind of like the opposite of overhead. That's your gross profit percentage.
Yeah. I'll add this. Profit is to your practice what oxygen is to your body. Without it, both die. And you might be on very little oxygen right now and super stressed. And it's not about the money. The more profit, I like to refer, the more margin you have. You actually have room to breathe. You don't have to run as fast. When you're profitable, you're calm. When you're not profitable, you're not calm. And so you've heard this cliche, I don't care what you produce, it's what you keep. And Barrett's going to define how those two fit together today, gross profit margin and what we keep.
Yeah. Well, I'm a dentist, and I know how dentists think, and I know the first question you're going to ask about overhead is we get all the time, well, what should it be? And we always say, well, 60% is a starting point. Is it 62%? It's the end of the world? Probably not. Do we want it at 58%? Absolutely. If it's 70%, is that a problem? That it is a problem.
Yeah.
Okay, so roughly speaking, 60%. Now, the reverse of that, what should your gross profit margin be? 40%. So last week, and we'll do it again today, is like if you need a financial benchmark to get started, we say the starting goal point is 60% overhead, 40% gross profit margin. Now 30% or 3/4 of that gross profit goes to the dentist salary, the salary as a dentist, not the owner. And then there's 10% left over for the entrepreneur, the owner, in ROI. So 100% collected, 60% goes away to overhead, 40% left over. 30 goes to the doctor, 10% goes to ROI for the entrepreneur. So this gross profit margin, the opposite of overhead, is 40%. We believe that competitive salaries for dentists is roughly speaking 30% of collections. So you can see where if your gross profit margin is out of whack, where it's going to be hard not only to pay yourself a competitive wage, much less take on any ROI, be able to reinvest in the business, pay your loans, et cetera. So when your gross profit is 27%, that's when you're like, what the heck happened? Why am I not making any money? I know lots of dentists making way more money than me. It's because we have some profit margin issues. We have some financial gaps issues. There's not enough margin or gross profit left over after you pay all your bills.
Okay, I want to go right there because if you're impatient like me and a know-it-all at times, which causes problems, you're thinking to yourself like I would, like, I got this, Barrett. My overhead's 65%. My profit margin, but remember what Barrett said, gross profit. Now, I don't want to get into next week, but I'm going to tell you what we're going to talk about next week in case you don't want to listen. You can have a gross profit of 65% and still have no money. You can have a gross profit of 30% and not, have no money because you still have loans, you still have taxes. And here's a lesson I learned the hard way. The more you make, the more you pay in taxes, and you have to come up with this money. And so you might think your profit margin is healthy, and then you're super stressed because you're like, why don't I have any money? It's because you don't know the difference between gross profit and net profit, or what we call true profit. So that's coming next week. I just wanted to say that right now. But let's talk about what we can do now, Barrett, when it comes to this.
Yeah. So just conceptually think about this. We brought in $1 million. And our overhead is 60%. So 600,000 goes away. What's left? 400,000. I'm using fourth grade math, 40%. Okay, but we pay ourselves 300 grand. Okay. Now we have 10% left over. That's a good model based on $1 million in revenue. And you do the math if it's different than that. But what happens if our gross margin is 25%? But we're a doctor. And we've got to pay ourselves 300. I got a BMW, I got a boat, and I just bought that cabin up north. Now we're backwards. Now we're actually have a negative cash flow issue in our practice, and our spouse is mad at us because we're not making enough money. And the tax accountant says, boy, you owe a bunch of money. And you're like, where is all that money? So this is an important number. So gross margin is before you pay yourself, but then you do pay yourself. And that net profit after gross, then you pay yourself and you have net. That's the same number as the bottom of your P&L. The very last item on a P&L is net profit. So why is all this important? I know it's complex. Well, higher gross profit, we said it was an indicator of health. So the higher that percentage, the more revenue that you have available to invest back in your business, the more money you have for profit to pay yourself or associates competitive wages, the more money you have to give raises, pay earned bonuses, the more money you have to invest in technology to truly use the best labs. It's the first real indicator of whether your profit margin is out of whack. Yeah. So if you're like, I produce a lot of dentistry and your gross margin is way lower than 40%, you have a profit margin issue.
Yeah. And again, no one cares what you produce. They only care what you keep in profit. Now, Barrett, you can speak to this. And there's a little bit of a false proxy in dentistry around P&L statements. Actually, there's a big false proxy. So you might have a dental accountant, and your dental accountant is like, you're doing great, Barrett. Like, look at the bottom of your P&L. It says you're you're making $400,000 a year. Well, it doesn't tell the rest of the story, which we're going to tell next week. So you do want your gross profit to be healthy, like Barrett said. But that's not where you stop. And I've had so many dentists use the P&L as their only instrument to help them understand, am I doing great or am I doing not? Because this is what your dental accountant says. Dr. Barrett Straub, look at the number at the bottom. It's 400. Like, you're in the top 1% of the dentists I have. Do you know what I mean? And then you're like, wow, well, I'm feeling pretty good about myself, but where's my money? And they're like, I don't know. So, I'm just here to say this. Can you add this? Because I have spent a lifetime of dentists sending me their P&Ls going, I think I'm doing my dental accountant says I'm doing pretty good. Well, at the bottom, your gross profit says 40%, but that you can't stop there. Would you agree with that statement, Barrett?
Yes, wholeheartedly. And I lived through this personally. I made a lot of mistakes, and that's where a lot of this advice comes from. So a couple things. Your CPA is a great person, probably very good at their job. 99 out of 100 times, they don't make as much as you, and they've never owned a small business. And so this idea like you're doing good, I don't like it. I would tell my accountants, that's great, but I need you to help me know where every dollar of production went, because I own this business and I'm giving blood for it, and I want to make sure it's as healthy as I need it to be and want it to be. So I just want you to remember that you own a small business. Your accountant who you're taking business advice from likely has never owned their own business before. And so unless you've owned your own business, you can never walk in those shoes of looking at and saying, I need this to be as good as humanly possible. Not good enough, not average. And so it's just a different mindset. And once you have that, you'll nicely pressure your CPA to give you a higher level of service. Nope, that's great, but I need to know where every dollar went. Now, we're foreshadowing to next week because we're going to talk about true profit. But here's the take home in preparation. If you have loans, so let's say you have a practice loan. Let's say you're 5 years out of school, you bought a practice, and you're paying $5,000, $6,000, $7,000 a month for your practice, and you pay it through the business, which you should. If you have that, or you bought a CBCT or you bought some other technology and you have a loan and you financed it and you're paying that, I want you to go on your P&L and find those payments. You're not going to find them.
Why
I ran
not?
into this every dentist. You're not going to find them on your P&L.
Yes.
So all these, some of you have $10,000 or $12,000 a month of loan payments that you think are, and rightfully so, I thought so too, that theoretically should be deductible business expenses. They should be on your P&L. They should reduce your taxable income. They don't. You're paying them with profit, and you will never find them on your P&L because that's illegal, and you're going to only find them on a cash flow. Now, what you will find is the interest on those loans, but you're not going to find the premium payment. So if you have any loans that you're paying through it, I want you to go on the P&L and see if you can find those expenses. You're not going to find them. And we're going to explain why next Monday. But anyone who's out there and you're like, oh my God, you're totally expressing what I'm feeling. My accountant gives me the P&L, says I'm doing good. I'm producing a ton of dentistry. The net profit number at the bottom of my P&L looks really great, but I still don't know where that money is. I'm speaking to you. Join us next Monday. We're going to explain it. Go to our money roadmap and our BPA. We have it all laid out for you. That's going to walk you through it. It is complex. And as a business owner, once you learn this stuff, it simplifies all your strategy for the rest of your career. And actually, once you know it, it's pretty simple. It's just unfortunate that we haven't been taught this stuff by our CPAs.
Amen, brother. Now, if you're listening to this and you're like, man, they sound really fired up, almost kind of angry a little bit.
Yes.
Don't mistake our anger for passion. It's passion. We love this stuff. We love this stuff. We fight for our clients so hard to make sure they get this, and we will not stop. You just can't tell somebody one time because you're like, you got to figure this out right now. And when they do, it's exactly what Barrett said. They're like, oh my gosh. I'm telling you, what Barrett said is so true. And when you get this right, it becomes so much fun. I'm going to leave you with one last thought, and humor me because I've been doing this a long time. If you're a dentist, one of your least favorite sales pitches of all time is when somebody comes in your office and goes, you know, you should get this technology. It's only one more crown a month. Have you ever heard that one? If you look at how this dribbles down, the truth of it is it's actually 3 crowns a month because you're not collecting any of this at the end of the day. So don't let somebody let you think, oh, this is just 1 extra crown a month. No, you're going to have to do 3 of them to pay for this thing if you really look at the math. So we just want you to be careful about this. You have to know these numbers. And when you do, it makes you a better person. Look, I'll be the first to admit this. Nothing makes me a better husband, a better dad. This is terrible. I should get therapy. Than when I know today was a good day. We got money in the bank. We're good. Like, I don't look at it. When you have margin, you can breathe. You can be better. And that's what we want for you guys. And if this is stressing you out on a Monday, well, let's do this in a positive way. Don't stay there. We got so many tools back in the Best Practices Association to walk you through this. You can actually download the tools. You can fill this out. You can do it all on your own. You can figure it out. Or you can come to the Top Study Club. You can see this next quarter. It's going to be all about your data and how it all works. You can come for free. Nothing's better than free. Talk about easy. That's free. Or if you've tried everything, don't do that and you're just frustrated. We are pro coaches. We help people do this. We work with hundreds of the best practices in the country. These people do not have bad businesses. They have great businesses. And their only thought is, I just want this to be a little bit better. That, my friend, is what we are experts at. So don't stay there. We can help you. So please raise your hand if you need help. And tune in for next week where we're going to cover what, Barrett? What are we going to cover next week?
We're going to cover true profit.
Ooh, what I don't even know what that means.
Actually take home and put in your bank account. It's this mysterious number that for most of my career, I was in search of. And once you are able to calculate it, it's a game changer for the rest of your life.
Yes. And if you think today stressed you out, wait until next week. We're really going to stress you out, but you'll be able to do something with it. You'll be able to see it better. And when you see it, you can't unsee it. So tune in next week. So Barrett, stick around while I say goodbye to everybody else. But thank you guys for tuning in to the Best Practices Show podcast. I hope your day is a good one. I hope we didn't stress you out. Our job is just to help you. We love this stuff. Dentistry is one of the greatest professions ever. And if you get this right, I'm telling you, it's magical. So let's do this. Tune in next week where we'll continue this journey. And keep sending us suggestions for things you guys want to see. We have an amazing lineup coming up in the next couple of weeks. So until we see you guys next time, or you hear from us next time, keep watching or keep listening to the Best Practices Show. You guys enjoy your day.